Hi, everybody. It's Jessica Stone at Stansberry Research, along with Alan Gula, the lead analyst on the Stansberry Investment Advisory. And one of the things he's really been writing about is a way to play what we're seeing out there in the stock market right now. In other words, everybody's looking for a magic bullet. He says investors should focus on finding forever stocks. What do you mean by that? And what are their qualities, Alan?
Right. So we're in a bear market, and I love bear markets because you can buy a lot of stocks that have gone on sale. And yes, I think that most investors should be focusing on forever stocks, which are basically just stocks you can hold for the very long term. These are companies that have enduring competitive advantages, and we can be pretty sure that they'll be successful decades from now. Forever stocks are also what we call capital efficient. Basically, they have wide free cash flow margins. And that means they don't have to issue a lot of debt to finance their operations, and they can return a lot of capital to shareholders via dividends and buybacks.
So what is an example of a company that's traded on the stock exchange, maybe on the S&P, that would fit that description?
Right. So disinfecting wipes are flying off the shelves.
We are using those a lot.
Yeah, everyone is. So Clorox, in my opinion, is a forever stock. Its other brands include Pine Sol Cleaner, Glad Trash Bags, Fresh Step Kitty Litter, Kingsford Charcoal, etc. And so Clorox's brands are really its competitive advantage. They're recognized by consumers, they're trusted, and they garner prime shelf space at retailers.
How is it held up in this bear market, though, Clorox?
The stock has performed really well. It's up about 20% year to date. But remember, we want to buy stocks that have gone on sale. And Clorox has not gone on sale. In March, we basically had a stock market crash, and there was a flight to safety trade. Treasuries soared, and also consumer staple stocks like Clorox held up well. And so now, consumer staples, they have non-cyclical businesses. They tend to do well during recessions. And this is why investors have gravitated towards these types of stocks the past couple of months. But Clorox has become expensive. It's still a great business. Anyone who owns the stock can still continue to hold it. It's a forever stock, but I wouldn't add to a position or initiate a position. Instead, there are a lot of forever stocks that have sold off and gotten cheaper during this bear market, and those offer better risk-reward proposition going forward.
So you talk about the calculation that you're making when you decide if you're paying too much or if you're getting a good price. What is the calculation you want people to think about when they talk about, I want to get into a forever stock?
It would be free cash flow yield, but valuation has gotten really tricky in this environment. The first and second quarter results for a lot of companies are going to be complete disasters. But the market tends to overreact to short-term results, and if retail investors can maintain a long-term perspective, that gives them an edge. We just recommended a forever stock in our flagship newsletter, Stansberry's Investment Advisory. That stock is sold off because it's dependent upon consumer spending, but it's going to thrive once again, if not in the third and fourth quarters, then definitely in 2021. So that's a flagship newsletter. We also just created a new service called the Forever Portfolio, which only recommends forever stocks. And so that's really a perfect offering for long-term investors during a bear market.
Okay, and people can, of course, read more about your thoughts on this concept at stansberryresearch.com. And if you would like to see more content like this, please subscribe to our YouTube channel. You can also follow us on Facebook, Twitter, and Instagram. That's all for now. Thanks for joining us.